Hello, everybody, and thanks for joining us for a special live edition of All Things DSO. I'm Beth Gaddis, the editor-in-chief at Planet DDS, and I'm joined today by my friend Brian Colao, the director of the Dykema DSO Industry Group, who just gave me a little bit of a heart attack as he slid into the chair about 10 seconds before we went live. So, Brian, I'm so glad you could join us today.
Beth, why you got to air out dirty laundry? I thought we were friends. I mean, it's a little bit of a difficult day. I had to take a call, but I don't know why you got to, now make me look late in front of all our friends today, but whatever.
It's like a little 60 minutes, with the empty chair I thought we were going to have to do. But, this is
Whatever, Beth, I'm here on time. Welcome. So good to be. Even if you don't like me, Beth, I still love you, and I'm so happy to be here.
I say that you're my friend, and that's why I can give you grief over this kind of stuff. So, we want this to be really interactive. If you have any questions, please add them to the chat at the bottom of your screen. A bunch of people have already texted me when they heard we were going to be talking today, Brian. So I've got a list of questions to already ask you. But let's begin off. We now know who the next president of the United States is going to be. In your opinion, how does this change things in the dental industry? What's different today compared to yesterday morning?
Yeah, I mean, let me say a couple things about all this if I can. This was probably one of the most closely watched elections, at least in my lifetime. And I know a lot of people are, some people are really happy. A lot of people are really upset, by this. It's one of the most emotional things I've seen. I have I think 150 people I'm responsible for in my organization. I've talked to a lot of CEOs of large DSOs and their organizations, and we're all saying the same thing. I mean, we have to, a lot of people are really unhappy with this outcome. Other people are happy, and we just have to, address this, as how should I say it, as sensitively as we can to everybody's thoughts, but for purposes of what we're here for, because this isn't like CNN or Fox or MSNBC. We're not here to rehash, all the candidates and what's good and what's bad. We're primarily here to talk about, what are the implications for the DSO industry. And what I will say is, I think there's a silver lining. Even if you're really, really, really unhappy about like the outcome and you don't like this president and all that's really, really bad in your mind, there's a really good silver lining if you're in the dental industry, because I think this is, we're going to see lower interest rates. I think we're going to see a couple more interest rate cuts here in the near future. We're going to see a lot of deregulation. We're probably going to see a reduction in the corporate tax rate and the capital, or at least the capital gains rate is going to stay the same. At the worst, it's going to stay the same. It may go down. And I think it's going to be a much more favorable environment for the dental industry to thrive. So I would say, even for someone that's not, personally not feeling good about, the outcome of this election, at least there's a silver lining here. I think this might just be the stimulus we all needed, because it's been a very, very, I wouldn't even say a tough year. It's been a tough 2 years. Since the middle of 2022, when the interest rates started to go up and inflation started to go up, it's been very, very difficult to get deals done and for organizations to, be able to meet their budgets and do the things they need to do.
Inflation had obviously already been coming down. I think the last number I saw was about 2.4%. We already knew that there was going to be an interest rate cut expected in December. Going beyond that, what do you see kind of playing out now because of the change in who's running the government?
Confidence. A lot of this stuff, a lot of these markets operate on confidence. It's sort of like, if you're a religious person, they use the term faith a lot. Like, we can't quite see it, but we're going to believe in something. It's the same thing with a lot of these markets. By the time it's 100% clear to you, like you've looked at it and you're like, oh, interest rates has now gone to, I'm just making this up, 1%, and all these expenses have gone down. By the time you figured that out, it's too late, probably. You haven't moved quick enough if you're trying to do transactions. So all of these markets operate on confidence and people's projections, what do they say, projections or, prognostications of what they think is going to happen. And I think there's a lot of confidence. There was a lot of uncertainty this entire year. People didn't know, a lot of things that were going to happen, particularly with the election. I would say of the uncertainty that was out there, a lot of it, probably 75+% of the uncertainty was tied into this election. Now there's no more uncertainty. And at least if you can go by, this particular president says a lot of things, a lot of different things at a lot of different times. But if you can go by a lot of the things that are being said, they're very favorable. They're very, very favorable for the industry. Lowering corporate tax rates, for example, committing clearly not to raise the capital gains, tax rates. These are things that are going to benefit us. So this is what I would say, even if the interest rates aren't completely where they need to be, there is more than likely going to be a lot more confidence in the market right now, not just because it's certain. We know what the next 4 years will look like. We now have the election over with, but we know that we have a president that's, pro-business. There's just a lot of confidence. As I've talked to a lot of private equity folks the last, before the election and even after, I've gotten a lot of phone calls and talked to a lot of private equity folks. It's upbeat. The mood is upbeat, even as there are people that might be just personally upset because they don't like the president. The mood in business has been upbeat, very, very upbeat, a lot of confidence, a lot of optimism that we're going to be able to get deals done, and a lot of optimism with respect for profits for the organizations. Even if you're not doing deals, if the taxation rates and things go down, you're going to be able to be more profitable and get more accomplished that way.
So let's dive into that a tiny bit more for people that are looking to do deals. Do you have any predictions about the timeline? When do we expect that things will start rolling again and that it will be easier to get across the finish line?
I think about the end, the first quarter. I really feel like, end of the first quarter, it's not going to happen overnight. I mean, even with, the fact that the election's over with, nobody's being sworn in till January 20th. I was relieved that, this year the election is very much over with, meaning there's no litigation, there's no continued issues or disputes or things. It is indeed over with. And that helps us from a timing standpoint, because if the election doesn't even technically get over with, that delays things even further. But because this thing really ended, about midnight, 1 a.m. on election night, like it used to in the years ago, it used to end there. And lately we've been dragging it out. But because it ended very quickly, I think you got to wait till the inauguration, January 20th. But I think first quarter of next year, there's going to be a lot of optimism, I think, and probably you would see heightened activity in the second quarter. The first quarter, people will be out there, signing up LOIs, looking at transactions, exploring things. And probably second quarter is when, you would expect the deals to get done. But, there's the highest degree of optimism right now that I've seen all year. Okay. And talking to private equity groups, talking to CEOs at DSOs, talking to middle market DSOs, small DSOs, big DSOs, there's a lot more optimism now than there's been at any point really since end of 22. I mean, it's been almost 2 years of a little bit of uncertainty and question marks and, just struggles and challenges. I think there's a lot more optimism now than I've seen in a long time.
Well, you and I had talked, previously on All Things DSO, just about potential sellers that, were working on having deals and that they had fallen through over the course of the past 18 months. What advice would you have for those, for those folks that had been hoping to sell and hadn't had any luck? Do they go back to who they had been talking to before? What advice would you give?
I would say this is almost like a reset. Okay. What happened 6 months ago or last year might be completely different from today because the banks simply were not lending. Everything was kind of froze up. So if you were trying to go to market or exploring going to market even 3 months ago, and it just was like a disaster, you're like, I tried, no one will do anything. I would not hesitate to just start over and do it again in January, because I think it's going to be a completely different environment. I mean, nothing's going to so much happen in November or December, but starting in the first of the year, I absolutely would go back in the market.
So let me go to some of the questions that have come in. One of them is, can you talk about what some of the proposed policy changes are that should create, corporate tax benefits?
Yeah, well, he flat out said he's going to lower the corporate tax rate. And a lot of that will depend. My understanding is the Republicans control the Senate, obviously the presidency. It looks like they're going to get the House. And if they do get the House and you've got all three, branches of, both houses of Congress plus the presidency, I think they'll start passing some of these tax cuts. And if they do that, that's the biggest thing. That'll make for a much more favorable environment for corporations and it'd be much easier to be profitable. There was this whole thing, I believe, with the Democratic agenda of potentially raising the capital gains tax rates. That's gone for at least 4 years. We're never going to hear about that. And that's positive also.
Another question that came in is, do you see any changes to the regulatory environment that could have a positive or negative impact on DSOs?
Yeah, the president has committed to just about deregulating about everything he possibly can. And I think that's going to trickle into healthcare. I don't think it's going to be dramatic. Like there's no huge legislation I'm aware of that now is going to go away. Oh, what I will say, no, I will. Remember the non-competes, the whole non-competes with the FTC. I think that's all off the table now. And I think that's a very favorable, I forgot about that for a second, Beth. That's a very favorable development. We were going that whole FTC rule. Obviously, there's an injunction stopping it for the moment, but I think it's going to go away. I feel like this president is just going to abolish the rule entirely, and the director of the FTC is going to get fired. I mean, he's already said that as soon as he takes control. She would probably go anyway because she was appointed by a Democrat, but he's made it his priority that she's going to go. The author, I think it's Lena Khan, the author of the non-compete rule. She will not be she will not be working there much after the inauguration. So I think not having a capital gains tax increase hanging over our head and not having this potential non-compete rule hanging over our head is going to be very, very beneficial to this industry.
Another question that came in is, what are your thoughts on what had been some federal pushback on concerns about consolidation in healthcare? And I don't think it means just dentistry, but healthcare overall. And what are your thoughts on that?
Well, I think it's trending favorably. There was a huge victory. If you haven't been tracking this, the folks that are watching, California was just about had passed. In fact, their legislature passed what I believe was a very heavy-handed bill that said if you're a private equity group and you're buying into healthcare, including dentistry, you had to get the approval of the attorney general. And there were a whole bunch of restrictions and things that the attorney general could do to require information, interview witnesses, do all this stuff, and then reject a transaction. The governor wouldn't sign it. Governor Gavin Newsom did not sign that. And that was a huge victory that happened about, I think it was about October 1st, like the end of September, early October, that we got that news. So that was a significant victory, because that California bill that never got passed into law was one of the most onerous ones that I'd ever seen. I mean, people were really, really worried about that, what that was going to do. And I was very relieved to see that it didn't pass. But a lot of other states are looking at the idea of, if private equity wants to make a healthcare investment. Now, in a lot of cases, we can get dentistry exempted out from the definition of healthcare. And if we do that, that's really good, because, a lot of the concerns came in hospital settings where people had very significant diseases, cancer, heart disease, strokes, and they felt like they had adverse events happen because private equity had invested in those. But, at least most of the time in dentistry, the bad joke, we don't kill anybody. I mean, you really have to, it's usually in dentistry not involving life-threatening things, so usually, and in many cases, we can get dentistry exempted from the definition of healthcare with these particular, bills and laws that they're trying to pass to regulate this. But, it's something I'm certainly going to keep a close eye on. I know that at least the presidential administration's not a fan of these sort of things, but these are state laws. That's the only thing. They have nothing to do with the federal government. So regardless of what this president thinks or doesn't think of them, if the states decide to pass these laws, we're going to have to deal with them. But so far, it was a huge victory getting the California one, not enacted into law, and hopefully that trend will continue.
We have a question that came in about recapitalization. It says, with the delays in the recap events in the PE sector over the last 24 to 30 months, when do we see liquidity coming back into the sector?
Well, sooner than later. I mean, I will say that. I mean, nobody has a crystal ball, but, these were very positive developments. Again, I know that some people are unhappy with the outcome of the election, but from this question of M&A markets and getting recapitalization events, this was very favorable. We had one big interest rate cut in September. Looks like there's going to be another one before the end of the year. Plus, we have a Republican that's getting sworn in on January 20th. So we are creating, it's not going to happen overnight, but we are creating a much more favorable environment for recapitalization events. plus there's confidence and less uncertainty. So, you can't really do, but I would say this, it's looking good for the next year or so. If it doesn't happen, in 25, I'm talking about major recapitalization events. If you're a smaller organization looking to sell your practice or your 3 practices or your 5 practices, I think that'll happen in 25. I feel like that stuff is really going to be in play for most of 25. Some of the larger deals, it wouldn't surprise me if it still takes 6 months, 8 months, 10 months for that to happen. But, we see the end of the tunnel. The scariest thing, Beth, during a lot of these other shows we put on or earlier in the year or times when I would be speaking to audiences at conferences is it was uncertain and we just didn't really know when it was going to end. Now I at least feel like there's a light at the end of the tunnel. I can't tell you if the tunnel is going to take 8 months, 10 months, 12 months, but we see sort of what the end might look like. And that's really, really favorable.
This goes a little bit to what you were just saying. The question is, with the cost of equity still being cheaper than debt, can we see anything before Q3 of 2025?
Yeah, I do. I think we can. I really do. I think you're going to see some transactions of middle size close the first half of next year. I would be surprised if some giant ones went through, but you're going to see some middle of the road ones go. And I feel like, third, fourth quarter of next year is going to look pretty good. That's what I think. I really am very optimistic with this.
Another question that came in is just, talk to us about what you're predicting as far as multiples. Do you see them going back up again?
Yes, but not, we are not going to return to 2021 or 2019 or last quarter of 2020. I mean, that was sort of a, once in a generation sort of thing happening from COVID, pent up demand, wanting to close deals, sort of before what it looked like President Biden was going to increase capital gains taxes. I mean, there were so many things at play there that created those, extremely high once in a generation multiples that we saw in 19, end of 20 and 21. We're not going to go back there, but I do think it's going to return to a really solid place, like a really good place. But yeah, we're going to be really hard pressed to, to go back to those highs of 21.
Would you be comfortable defining what you consider to be a really strong place? Like what kind of number would be realistic?
Yeah, I mean, it's hard. And I should say nobody can hold me to this because we're really sort of, speculating here. But yeah, you saw a single, like I'll give just some historical analysis. We saw single practices used to go for anywhere from a 3 or a 4 or a 5 multiple. At the end of 21, there were some single offices going for like 7.5s and 8s and stuff, which were unprecedented. And big organizations that, might have been happy with a 10 or 11 multiple were getting 16, 17s and 18s. I mean, I would say just a guess, if you're a solo office, you're not going to see 8 or 7.5, but you can go back to like 6 or something like that. If you're a middle of the road group, you're going to easily be able to hit 8.5 to 10 or something. The larger organizations, maybe it's going to be somewhere between 12, 13, 14 maybe, but we're not going to hit these 16, 17, 18s or 8s for solo offices, or even some of the smaller middle of the road groups that maybe had 15, 20, 25 offices, they were going for 13s and 14s. I don't think so. I think you're going to get in the 11s, 12s, things like that. But, that's healthy. I mean, it might be disappointing to some sellers out there, but that's healthy. I mean, I think we're seeing right now, this is what I would say. If there are sellers listening and if they're saying, oh gosh, I wanted that 16, why are you telling me it's going to be a 13 or a 12? What I would say is we paid the 16 and some of those organizations failed. I mean, they overpaid and they're not with us anymore. So if you had a rollover, your rollover would be worth 0. I mean, to me, I'd rather take a 10 at closing and have a rollover that's going to be 3 or 4 times my investment than take a 14 or 15 at closing and have a rollover that's worth nothing because they overpaid. I mean, you have to be responsible, with these multiples. You just do. As disappointing as it may be to sellers, the brokers are going to get mad at me and everybody's going to be, yelling at me for saying this, but you have to be responsible with these numbers.
Well, we actually had a question that came in that also talks about situations that were disappointing in the past year. The question is, what's going to happen to practices that, quote, got mixed up with DSOs that have or are about to blow their loan covenants?
Okay. I mean, the way that question's worded, it could be nothing. Okay. Everybody's blowing their loan covenants. I mean, I'm going to read that question to be that might be in really big trouble or something, because the way that question's written, blowing your loan covenants, I don't know anybody that didn't blow their loan covenants in the last year or something. And a lot of the organizations, the banks just have to, let it slide, or, maybe charge a little penalty, but, just move on down the road. Yeah. So the way that question is worded, that are going to be in trouble with their loan covenants, I would say everybody blew them, and in many cases nothing happened. But the way I'll read the question is, does it mean are in big trouble financially or something? Yeah, I mean, if you're in big trouble financially as a result of, I went to a symposium for private equity groups recently, and the private equity phrase that they were using over and over again is people did stupid stuff with cheap money. That was the phrase that private equity people kept using. So if we're going to say, I got caught up because my group did stupid stuff with cheap money and now we're in big trouble or something, if that's the question that we're asking, it depends. Okay. Sometimes the bank will come in and just renegotiate something and nothing happens. Sometimes somebody else will come in and buy the organization, and at the individual practice level, it'll be mostly business as usual, except you have a new owner, that owns the whole thing. In some instances, the thing can go into receivership, and that becomes a big problem. And then, it's very uncertain as to whether certain practices are going to be spun off to some organizations. Others might go elsewhere. You might chop up the organization. Some things might go under, but that's sort of the minority. I mean, what happens in the majority of the time is either the bank renegotiates it or a new owner comes in and buys it, and it's largely business as usual. So in most situations, I think it's going to be just fine. There are a few select situations where things have gotten in really trouble, not a little bit of trouble. They got into real trouble. And then it just depends. I mean, it really depends on the situation.
No, obviously with the tough market for M&A over the past 2 years, we saw a lot of turnover in business development roles. We saw some turnover in the C-suite with CEOs, et cetera. Do you anticipate that there will be a little bit more stability now in organizations?
Yeah, I feel like there has been stability for the last couple months, let's say the last quarter or so. I mean, I think, this all happened in the middle of 22. And, for 22, people were just kind of figuring out the new normal and what this meant. And a lot of folks were slow to react. They didn't even know, they didn't know this was the big one. It was like you heard a little tremor, but is this just going to be a tremor, or is this going to be the earthquake? And people really found out about the first quarter of 23. No, I mean, this is a bit of an earthquake. We've got interest rates skyrocketing, inflation is skyrocketing. Wow, this is a problem now. So we saw a lot of disruptions in terms of changes in the C-suite and things like that happen throughout 23. We did see a good bit of that in the first quarter, maybe even parts of the second quarter of this year, but most of the third quarter was fairly quiet. I mean, I'm not saying there haven't been a couple changes here and there, but it was really starting to calm down, by the third quarter of this year. And I feel like with some of the optimism on the business sense that's out there right now, or on the business front, the optimism that's out there, I'm not anticipating a lot. I mean, nobody get mad at me if somebody makes one change or something, but generally I'm not expecting a lot of upheaval. I think most of those upheavals in the C-suites at the DSOs has mostly occurred in 23 and first half of 24.
And we just had a question that came in that says, do you see a strong DSO pipeline of deals to close out Q4 and Q1? Seems kind of
well, yeah. I'm not the part that tripped me up is Q4. No, not for Q4. But is there enormous demand and a good amount of inventory? Yes. I mean, just about everything that I can think of is technically for sale. They're not going to give it away. And if they can't get the price that they want, they won't sell it. But is it for sale? Yeah. I mean, I did an inventory recently of around the top 50, what I believe to be the top 50 DSOs in the country. And they're virtually all for sale with few exceptions. There's a couple exceptions, but generally they're virtually all for sale. It's just they couldn't get the price that they wanted or the valuation that they wanted, so they weren't willing, to go to market. And when you go to the smaller organizations, there's hundreds maybe even thousands of things that are for sale. We just had to get the market, to a better place. So I think there's a very, very strong pipeline as the conditions continue to improve. And what I think you're going to see, you're not going to see too much in fourth quarter. You're just not, there'll be no explosion because of this or anything like that. But in the first quarter of next year, it'll start with the solo deals. They'll continue to uptick. It'll go to the middle market deals, maybe not the small groups and things like that. And then we're going to be building up to some large transactions. I mean, I'm confident before 25 is ended, there will be some large transactions that close.
And let me just make sure I heard you correctly. Did you just say that the top 50 DSOs in the country you think are all up for sale?
Virtually. I mean, there's a few exceptions. I don't have it. Is it like 42 out of 50 or 43? But yeah, no, I did. They all are. I mean, because here's the trend. Of the 50, they're almost all of them. There are a couple that aren't, a couple notable exceptions, but almost all of them are private equity backed. And if you're private equity backed, Beth, you have a finite time frame. I mean, it's just the way the system works. This isn't some trade secret here. If you have a fund with a private equity group and you buy, a DSO as a portfolio company, you are expected to recycle that in 3 to 5 years and go invest in something else and return the capital, to your investors. It's just the way the system works. That's not some mystery or big trade secret. That's just the way it is. And we've been stalled out, think about it, for at least the last 2 years, in this very challenging environment. So pretty much everything in the top 50, except for a couple, are sort of at their expiration date where, they're really overdue to do a recapitalization and do an equity event. So that's the logic. And as I went down the list recently, I was like, oh, yep, know that one, know that one, know that. Yep, absolutely. It was almost all of them. A couple of them snuck a deal in before the conditions deteriorated. A couple of them were very fortunate. They got a deal done, in the challenging conditions. But, except for a few notable exceptions, almost everything in the top 50 is for sale.
So who do you see coming in then to invest in those top 50?
Well, I mean, I think you will see regular private equity groups once they can recycle their money. I mean, that's the thing. If your money is trapped in other investments because the conditions are not ripe for a recapitalization event, you can't recycle that money. And so then you can't take that money and go, buy something else. So because how it works is they return their money to their investors. A lot of them are institutional investors, pension funds, and other things. They get their return. And then they say, well, okay, thank you for the return, but now this money is available to put in something else. But if that money never comes out, then you can't go back to the same people and say, well, give us extra money. They're going to say, well, no, you have our other money. When our other money comes back to us, we'll put that in something else. So, one, it would be the same cast of characters that always do, the private equity groups, once you start recycling their money. Two, I think there are some insurance companies that are ripe to invest in dental. There's a lot of synergies. And insurance companies are one of the industries that has a lot of surplus. They've done very well, lately, and their balance sheets are very strong. A lot of them have told me, they're in positions to pay cash for things and come up and buy stuff. So I think I would look, sort of at some insurance companies, not just here, both domestic here, but also in Europe and Canada and other places. Three, there's a lot of foreign investors. I mean, there's a lot of investors in the Middle East that want to diversify away from fossil fuels. I've had a lot of talks with folks over there that are saying, the plan for the next 50 years, if you're at places in the Middle East, is we want to buy companies. So when, it goes to all electric cars or the fossil fuels run out, we'll be in a position that we own hundreds and hundreds of companies and we're no longer reliant on fossil fuels. So there's a lot of investments coming out of the Middle East. There's been a couple that have already been made in the space, but I would look real closely to see some more of those in the next year or two.
Well, Brian, we are out of time. So thank you so much for joining me today.
We always just run out of time. We're done already. Okay. It's your show, but I don't know what to tell you. If you say we're done, I guess we're done.
That one flew by. And I would just like to say thank you to everybody who submitted questions. It was really fantastic to have that interactive and real time to be able to ask you your opinions on all of these different topics. And for everyone who would like to learn more about Planet DDS, I invite you to go on to planetdds.com. We have so many different resources, including an ebook on mergers and acquisitions that you can go ahead and download in our resources section. So for everybody who joined us today, thank you so much. Brian, have a great week, and thanks for joining us.
Thanks, Beth.